Hey, this is Arthur Hill, Chief Technical Strategist at trendinvestorpro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So today we're going to start off with some seasonal patterns because August and September look a little bit shaky. But we've got strength in semiconductors, and I've got 4 semiconductor stocks that are consolidating and looking poised to break out. And I've also got 2 industrial stocks that are going for breakouts. So we'll start off with some seasonal patterns, in particular the seasonal pattern for the S&P 500. So I'm here on the main charts and tools page at Stock Charts. And if you go down in the middle column, there you will see seasonality, and you can enter any symbol that you want in there. I'm just going to look at seasonality for the S&P 500. So I am going to squeeze this up a little bit so it can fit into the window. And so now we've got the seasonal patterns going back 5 years, and I'm going to click, hold, and drag this over so I can get a 20-year seasonal picture for the S&P 500. And so we can see here that a couple of months stand out on the positive side. Of course, we got April and November, clearly the strongest months seasonally. 80% of the time, these months have been higher over the last 20 years. Average gain, 2.4% for April, 1.9% for November. And then we look at the weaker months. January, surprisingly, is one of the weaker months. Less than 50% of the time it's closed higher, and the average gain is actually a loss. And then the next weakest month would be September. 58% of the time it closes higher, and the average gain is actually a loss. So August is a bit mixed. Average gain is 0.2%. It's on the lower side. 65% of the time it's up. But you can see that this August-September period is a bit of a weaker period. And I want to show you another take on seasonality using some of the indicators I put together at Trend Investor Pro here. So here's the home page for trendinvestorpro.com. And here you see it, objective, systematic, educational. And on the main analysis page here, I put out an article last week. And I'm watching 3 breadth indicators because there are lots of warning signs out there of a potential correction. One of them is seasonality. I also took a look at junk bonds relative to treasuries, stocks relative to treasuries, and then 3 breadth indicators to watch for an actual signal. And what I want to show you is this seasonality article that I wrote, and I update this every year. It's monthly seasonality. And this is on the premium content page, which has longer dated articles in that they have a longer shelf life. A number of strategy pieces here. I've got a 7-part series on using the Stoke-Close indicator, got some setup strategies. And then down here, we can see we've got the turn of the month strategy, which is a bullish 8-day period from the end of one month to the beginning of the next, the 4 days on either side. And then we have the seasonal trends for the S&P 500, the best and worst months. And if you look at these, I put them in a table, and I was looking at them as an equity curve. And so instead of just looking at the gains and the losses and the percentage of times it was higher, I went back over 25 years, and I looked at the S&P 500. If you only owned it during that particular month, what would your P&L look like, so to speak? And you can see August, you had a win percent of 56%. It was up 56% of the time. 14 winners, 11 losers. But the average gain was just 2.5%, and the average loss was 4.5%. And the profit factor, which is the total dollars from the gains divided by the total dollars from the losses, was below 1, which means there were more losses, was 0.62. And that's the lowest profit factor of all the months. So August is the weakest month when you look at it this way. And September is the third weakest month, actually. February comes in there at 0.82, but 0.83. So this August-September period is a weak period seasonally for the S&P 500. Now, that doesn't guarantee a correction. Seasonal patterns come second to price action. And as I said, I've got these 3 breadth indicators that I'm watching for signs of an actual signal, and I've yet to get that signal. Now, further down, I've got a equity curve for each month. And so there you can see January, February, and I'm going to skip all the way down to August. And this is what August looks like over the last 25 years if you only invested in the S&P 500 during August. You can see there you got hit in 97, 98, and then you had a couple bounces, but even after that hit, it's been mostly down. So this is a very weak month as far as the stock market is concerned. And then you look at September, it had a bounce in the late 90s, and then with the dot-com bubble bursting, took a serious hit. And then since 2003, it's done nothing in September. September's a nothing month. So these 2 months, August and September, are pretty rough months for the stock market. And just keeping that in mind when you're looking at breakouts, you're looking at bullish patterns, because the trends are still up. But if we get these seasonal headwinds, that means the chances of whipsaw could be above average going into, now August and into September. So, weak seasonal patterns or not, we still got some strong areas in the stock market, and one of them would be semiconductors. Here is the SOX, and you can see it had this big move up from the September low all the way to February. And then, when a lot of the big techs and whatever started correcting into May, SOX kind of moved flat. And so it kind of zigzagged higher, basically. That's a higher high. That's a higher low. That's a higher high. A little pullback there and a move to new highs. So the SOX is still doing just fine. I don't really see a pattern. We don't always need a pattern. But what we have here is kind of like a big move up, a big consolidation, breaking out to new highs. And that is positive for the SOX and related industry groups and stocks. And some of them that I am noticing here is Broadcom, and it's got a similar big corrective pattern, and it looks like it's breaking out of this big consolidation here. So there we can see this consolidation, and it went on for several months. You got a breakout and a little pullback, and now we're breaking out again, and I see a clear support zone right there on these lows from June and July. And if you're wondering, the indicators are the trend composite, which has been green for quite some time. I can back this out and you can see. So there's when the trend composite indicator turned bullish in June. And then the momentum composite is used to identify oversold conditions when the bigger trend is up. I need to erase those bars. And if you want to know more about these indicators, they're part of the Indicator Edge plugin for Stock Charts ACP. They're available plugins. And there you can see the Trend Investor Pro Indicator Edge plugin. So check that out if you're interested. Now, the other one I'm noticing, NXPI, and this is a semiconductor stock, obviously, as well. And you can see it's been in a big consolidation period, but it looks like it's breaking out of that consolidation. I mean, look at this steady advance that it had from that May low all the way to the April high. And then you need to rest after a big advance, and that's a big consolidation, and we're breaking out here. So NXPI is looking good. LRCX, which is semiconductor equipment, Lam Research, we can see a similar pattern in that you have a big consolidation, big triangle-like consolidation. There's the big advance. There's the big consolidation. And it looks like we're poised to break out here. Now, we could break out. We could move back to 600. There could be some noise in here with the seasonal headwinds and if the broad market corrects here. But the pattern, the setup, the structure of this chart is bullish. You're above the rising 200-day. The trend composite is bullish. You had a 52-week high in April. A consolidation is a normal part. It's resting within an uptrend, and a breakout would signal a continuation higher. And then the other one I wanted to show you was good old Texas Instruments, TXN. And similar pattern here, a big consolidation within an uptrend. And there we can see that kind of like the previous charts, a big triangle and look like it's bouncing off support and could be poised for a breakout. Now, one thing I'm noticing is you've got these sectors, these industry groups, and there's a lot of churn going on within these groups. Like materials, it's kind of been moving sideways for a few months. Industrials is moving sideways for a few months. But within those industry groups and sectors, you've got some stronger stocks. Some stocks are stronger than others. And one of them would be Martin Marietta. Now, it's an industrial building materials stock. And you can see that it had a nice run up from November to May with everything else. And then it consolidated with a triangle. And that's a consolidation within an uptrend. And you can see Martin Marietta's making a bid to break out here. And then another one that caught my eye was Ingersoll Rand. These are some seriously old school stocks, Martin Marietta and Ingersoll Rand. And you can see here that this one also hit a new high in May, and then it corrected with a move back towards the 200-day, the rising 200-day, and it is breaking out here. So it is showing some strength as well. So if you want to know more about the strategies available at Trend Investor Pro and that article on seasonal patterns, just hit that subscribe button on the main page, and you will get a video introducing trendinvestorpro.com and the subscription details. So if you'd like to know more about trendinvestorpro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.